Ladies and gentlemen, welcome to our first event in this year. Actually, I should be saying welcome to the season. 2021, we are hoping that it will be a much better year than 2020 was. We're starting on a low base, so hopefully really we can really go up from last year. We won't be getting worse than it was. So really, 2020, I mean, everybody can agree. It caught us by surprise, but at least in 2021, we have a bit of experience now. So we can handle some of the things and issues that had become very challenging for us in 2020. So thank you so much for joining us for this session. This is our first session, and we are starting with a bang. We've got the big guns. As you know us in Sandton, we never disappoint. We don't just have events for the sake of events. We try very hard to stay true to what the mandate of the BMF is, which is to develop managers, to develop each other as professionals, and also to look for opportunities to grow, because essentially we want to see socio-economic transformation in the country. And we can only do that if we are all empowered. We know where the opportunities are, we know where the issues are, and we can plan better based on the knowledge that we would have. So every now and then, we'd like to bring experts in whatever field that they'll be in to come and share with us some of their hard-learned experience that they would bring, and we get it for free. It's such a blessing to be part of this organization, because we get these things that if you were to pay for them, you would pay a premium price for this information that you'll be getting today. So we are truly, truly, truly grateful to be in this position. And we wouldn't be in this position if it went for our Secretary General of the branch, which is Lisa Lise. He works very hard. I'm so proud and happy to be led by him as well, because as a leader, I'm also led. And in Sandton branch, we are very fortunate because everyone who has volunteered, because everything we do in BMF is on a voluntary basis, and everyone who has volunteered has so much passion for the work and the vision of the BMF. And not just passion, but great leaders. So to be among such great leaders, it's always humbling, because what it tells me specifically is that the future of this country is safe. And so, because sometimes we hear a lot of stories in the media that may be negative in most instances about leadership specifically of this country. And then you get to work with leaders who are working on voluntary basis, and they give so much of themselves to make sure that the vision of the BMF is realized. It's really humbling, and I'm grateful. I'm really grateful, Lisa, that you've managed to get us this conversation today, because it's really a big one, and we are very proud. We're starting with a bang in the year. So thank you so much for that. Ladies and gentlemen, for those of you who may not know me, my name is Dr. Sibongile Vilakazi. I'm the chairperson of the branch. And then I'm supported by different leaders who are holding different portfolios in the branch, and they help me to come up with all these great ideas and brilliant ideas on how do we take the branch to the next level. And by taking the branch to the next level, we also then take BMF to the next level, which is essentially what we really want to see. So today, without wasting too much of my time blabbing on about the BMF, I would also like to introduce our guest today. We are really, really grateful to have you, Mr. Estienne de Klerk. Thank you so much for your enthusiasm, for agreeing to take time, because these things take time. You have to prepare to be here. You don't just rock up and start having a conversation with people, for opening yourself up for that conversation, for the knowledge that you're about to share with us, for building the relationship with the BMF, because I understand that the relationship with Growth Point has been a long-standing one with the BMF. It predates some of us. I mean, we are infants in the BMF, actually. So if you understand the history of the BMF, so some of us, we are still young, but we understand the mandate. We understand how big the task is to build each other as professionals, to develop managers in this country, to be influential in conversations and discussions that talk about how do we transform the landscape, how do we make sure that eventually we have a country that is inclusive in our diversity, because we always talk about how proud we are with our diversity, but we are struggling to find ways to leverage that diversity and to make it work for us. And we can only get there by having consistent conversation and empowering each other as we do that. So, ladies and gentlemen, Mr. Estienne de Klerk is the CEO of Growth Point South Africa. So you immediately understand how big this is, and I'm sure that's why you're here. You saw the invite and you realized that you shouldn't miss this. And we really thank you for that, for being here with us. And we hope that you will take this opportunity to learn, and also then to ask some questions if you have questions. We always welcome questions. That's how we all learn. If there's something that we may have missed, so we welcome that. Growth Point is if you're here, you know, it's the largest property investment group in the country. It's listed in the JSE. If you are interested in buying shares, you will know that their shares do quite well. They've been impacted by COVID, as everybody has been, but generally they do quite well. So please go and look them up and go buy those shares and own those shares if you need to be owning them. So yeah, thank you so much. I think without further ado, we'll start the conversation. But before we start the conversation, I was interested, Mr. de Klerk, because of our agenda as BMF of being a almost like a watchdog of how corporate South Africa specifically is progressing on the area of transformation. So I went and looked up your company reviews from your employees in your company. And I must be honest, I was quite happy to see such positive reviews. Your culture seems to be a great one. Thank you for that, for committing to driving the right culture, because that's how we see transformation, is when we have the right culture. Because sometimes we talk about these things, but they never happen. Why? Because the culture is wrong. You guys seem to have a good culture. Your employee, the reviews say that the environment is quite friendly. People feel independent, they operate independently, and they are growing. They're quite happy to wake up in the morning and come to work. You know, one or two complained about the incentives. They said they could have more incentives. I mean, obviously everybody wants more money or more this in life, so we always understand that. But there was also two ones who mentioned that they growing to leadership in the organization is a challenge. And another one mentioned that the leadership is not transforming as quickly as they are hoping that it should be transforming. So we are hoping that in this conversation, we'll also get the opportunity to show us some of your views about that in the organization that you are leading, and just as we're growing this relationship with the BMF. So thank you so much for being here again. And thank you so much for everybody who is watching us live right now. I will now hand over to our host today, which is Lisa Lise, our secretary of the branch. We call him our SG. Thank you.
Thank you, Chair, for that. You know, I just always say that when I am bragging, that I am led by Dr. Vilakazi, you know. And I think that that conversations with STN is that when I was then leading it through your then tutelage, it is that, you know, there are many headwinds within the then property industry. It has taken quite a big knock as the months have then unfolded. And with Growth Point being the king on top of the mountain, they have a better view of what the then future holds. And I think that's the main sentiment of the conversation today, to find out what the future holds. And it is just great to have STN with us today. I don't know if his tie will then strangle him tonight, because I think that the president also noted that we should stop wearing ties since.
At mine, at least there's South African flags on, so that's a positive suggestion.
Yeah. and I think I just value the fact that we have such a big participation this evening, and looking forward to then hearing what SDN has to say and what our members have, with him in terms of the various questions Q&A, and how the then evening will then unfold. I then understand SDN to be an extremely astute media individual. As much as he is a CEO, it's as if he has media training where when you then speak to him as well. So he's quite good. He's quite great with his tongue as well. So it would be great to just have that conversation flowing tonight. And without further ado, SDN, please just take us through your then presentation tonight. We are very excited to then be speaking to you tonight, and it will be just a great conversation. Thank you so much.
Thanks, Lisa. I really appreciate it. Thank you, everybody, for making the time to listen to me. There must be some level of irony in it that after 25, 26 years, the BMF has to listen to yet another de Klerk. But please don't judge the book by its hairstyle. I know nothing about politics, and a guy that focuses on the business side of things, and a very, very big patriot for our country. So I thank you for the opportunity. I think that, I wish everybody also absolutely the most prosperous and healthy and happy 2021. I think certainly the way the year started wasn't quite to plan. As I said earlier, I think to Lisa, that, we were hoping that at the clock at 12 o'clock on the first, all the horrors of the prior year was going to stay behind, and that 2021 was going to be an absolutely new year with no problems that we had historically. Unfortunately, it hasn't proven true, and in fact, I saw a meme the other day which said it's 2020 and then the word 1, 2020 and the word 2, which frightened the hell out of me. So hopefully it doesn't quite work like that, and that hopefully the view is that towards the end of this coming year, things should start looking up. I think to start a conversation around the real estate industry, it helps to just maybe reflect a little bit on some of the history of how this industry is developed in South Africa. And I'm not going to bore you with hours of history, but I think it does give a little bit of context as to how things have grown in our country and how we have developed the industry in this sector to become arguably competitive with that of the rest of the world. So if you look at historically, and clearly my focus is predominantly actually on commercial property. So I'm not going to discuss residential property. To be honest, I don't know too much about residential property, and we don't. The sector isn't highly exposed to residential property in the context, which is quite unique, because if you look at the international markets, you'll find many real estate companies which are residential specific, but there are some unique items why residential hasn't really taken off in our country on certainly the listed front. So historically, the people that used to build and own the property, the big properties being retail and big offices, and even the big industrial properties. So this is before 94 and to some extent at the sort of, let's call it the change in 2000, roughly around there, the change in the decade and century. The sort of trend was that big institutions. So these would have typically been pension fund institutions and life companies. So the Sanlams of the world, Old Mutuals, Metropolitans, these kind of companies had property investment wings, and they channeled money that came out of pension funds and out of investment funds into property investments, and they held these investments. So if you look at, let's say we're all in Sandton, Sandton City was built by Liberty, so that would have been pension and policy holder funds channeled into a property investment, and they had a development wing, so all the development skills lay in the business in these pension funds, and they used to build these assets and then hold them to cover the obligations to pensioners and to cover the obligations to various investment funds and policies. Now, in the late 90s, the country, as South Africa, started opening up its borders a little bit more in terms of in preparation for the change in the country. So from 94 onwards, the changes came through quick and fast. And these institutions increasingly looked to internationalize the investment. So what they were doing was they were selling what they deemed to be reasonably illiquid property investments. And I can tell you at the beginning of 2000, the late 90s, it was arguably one of the weakest times in real estate history. Globally, there was a glut on the property markets. Yields were very, very high, values were very, very low, vacancies were very, very high. So it was a difficult time. So these institutions were offloading properties, and they were basically taking the capital that they were realizing and investing it into the international markets. So that created an opportunity in South Africa for a listed sector to emerge, which was a very good thing, because until then, property was very, very narrowly owned, big commercial property. So clearly, prior to 94, black people could not really own commercial property in this country at all, which was obviously a massive travesty of justice. And what we have then seen post 94 is that even for a couple of years there, access, whether you were a small white investor or a large black investor, access to large commercial property was actually quite limited because it was reasonably tightly held by these institutions. Clearly, there were also private developers, and they also developed, and there we started seeing the emergence of various developers across South Africa of different races. And, certainly some of the bigger names have come through, and they well celebrated within the country in terms of their successes. But what we started seeing was that there was a international growth in the listed property sector, similar to any other sector, whether it's telecommunications, finance, mining. The real estate sector is an incredibly capital intensive sector. So it takes huge quantities of capital, and it takes patient capital, really, to be honest. So if you're developing a very large real estate development today, the returns normally take a while before they really get to the level which is acceptable for most investors. So it really meant that you needed patient and large quantums of capital, and that could be achieved in the listed sector. So what we saw is in America was the first place where they had real estate investment trusts, and this is the word REIT that you've probably seen bandied around. And what is the real estate investment trust concept? So it really is a specific tax dispensation which is set out in the global markets, and we've got increasingly in international countries there are REIT dispensations, and it provides for a flow through. So if you own the asset, you own rental income, you have property expenses, you normally pay interest on your debt and your administrative costs, and then you pay out all the profit. And the bulk of the investors, ironically, were the same institutions that were selling the property. So personally, I got involved in the listed property sector early 2002. Growth Point had kind of just had a rebirth. I mean, the company in 2001 September owned 15 properties. They were worth less than 100 million rand and had a market cap of 30 million rand. And over that period from 2002, and notice that is actually post 1994, we grew the business to today where it's got a market cap of over 40 and assets over 165 billion. Now, how we did that was effectively raising capital in the listed market from the very institutions that were selling the real estate. And why were they doing that? Well, it provided them with liquidity, and it provided actually the broad investment market with accessibility. So if you invest in a REIT, it's the most liquid and tradable way to own property. And it means that doesn't matter if you're investing 100 Rand or if you're investing 100 million Rand, you can get your exposure to, for instance, the V&A waterfront or the best quality retail properties in the country. So the listing of these assets made them much more transparent, and for the first time, from about 2002, we started seeing significant movement of property assets into the listed sector, which meant that South Africa really was modernizing its real estate sector, and it provided the impetus for a 15-year run of significant investment in property in our country. We also saw, as I mentioned, a significant growth in black ownership in commercial property. And that has also, proven to be via the pension funds as well. So today, the PIC probably, the Government Employees Pension Fund managed by the PIC is the largest investor, and predominantly most of the pensioners are black in that pension fund. So if you think about how savings capital works, most of us invest into our pension funds, and that money ultimately finds its way into the various sectors in our economy, of which real estate is one. So that was a very, very good thing to be able to get that transparency and get that liquidation of these assets that were never accessible to investors and small investors and pensioners. I think the other thing that was a big movement in the real estate sector was obviously in post the World Cup, and with the Zuma government taking over, there was a nearly a Rubicon that was crossed at some point, and from that point on, we started a steady, I would argue, decline in our economic growth and investment, and that unfortunately has played out in the likes of a Growth Point share price. So if you go and look at Growth Point share price, it would have been pretty stable for maybe 7 odd years. And then clearly at COVID, we've seen a massive plunge, and literally we halved the value of the company by no fault of the people working in the business. So it was a absolute nightmare that happened to us. But the one positive thing that helped to nearly mitigate some of that was in 2013, South Africa received its REIT dispensation from National Treasury, and that created the first REITs on, so it's only been actually 7 8 odd years that we've had REITs in South Africa, but that has been a very good thing because it also provided the international markets with better access to our investment property. And then here we are in 2021, and clearly the world is a different place, and where to from here. So I will touch on that at the end of my talk as to how I see things maybe panning out. Maybe just touching on the various sectors so that everybody has just a little bit of an idea of where we are, what are the dynamics in the different sectors. If you look at the various commercial sectors, it includes retail, office, industrial, hospitality, healthcare, student accommodation, data centers, and a variety of other very niche specific real estate. Now, these sectors generally are all property that is used for business. So it hosts business in one form or another. And in fact, residential is also run as a commercial business, but in South Africa, that is rather small, although there's a bit of emergence of that in our country. And I think one of the reasons why that is that there aren't that many institutionally investable assets available. So when I talk about institutionally investable assets, investors want a block of flats, as an example, with good leases that are sustainable, and that's why they invest on it. They like the certainty. If you think about a retail shopping center, the tenants in the shopping center are the retailers. Now, South Africa have actually quite strong retailers, the likes of Checkers, Pick n Pay on the food side, you know, the Truths, Foschini Group, etc. on the clothing side, and a variety of other big brand names, Vodacoms and the banks, etc. that would rent in these properties, and they pay rental. Now, those rentals typically increase similar to escalations in inflation, and because of that, that is what makes the investment into property attractive investment for investors and pension fund holders. So in any balanced portfolio, if you have an investment portfolio, your own money that you're investing, normally if you have a balanced portfolio, you will have a bit of equity, you will have a bit of cash, you will have a bit of government bond exposure, you will have some offshore investment exposure, and then real estate makes a key pillar today of all investment. Now, clearly the past couple of months hasn't been great for real estate. And in fact, we've probably been harder hit than some of the other sectors, given the specific dynamic in real estate. And if you think about retail, there's also, you know, certainly a lot of noise around online. And clearly, if you've got a full lockdown where half the shops are closed, it's absolutely devastating for the retail property business. And in fact, in South Africa, we did pretty well. We diverted a large-scale litigation mess between landlords and their tenants through constructive negotiation. In fact, we worked through that reasonably quickly, but at great expense to certainly the real estate sector. And in that time, the real estate sector specifically put down probably the only real fundamental fiscal stimulus package for business in the form of rental discounts, which immediately went to all the different businesses, big and small, and probably cost the sector in excess of 13 odd billion rand. But at least it went directly to those businesses, and those benefits flow through immediately. So in retail, we certainly got hurt a little bit in that space. And if you think about our economy, which is under pressure, people losing their jobs, retail is also under pressure. I saw today in the front page of Business Day, you know, the Truths Group were talking about their turnover coming below 10% less. And, you know, that obviously ultimately the value in terms of rental that tenants can pay has a direct correlation to the trade per the square meter or per the shop that they're renting from. So there's a big correlation. So retail per se in South Africa is very, very well developed. We have good shopping centers, which are world-class, and there's a very good spread of these, and it's a very well-developed sector. And in fact, arguably maybe overdeveloped. So we have seen retailers commit continuously to new developments, yet the growth in the retail market hasn't been there. So unfortunately, we are seeing pressure on rentals and on vacancies in this specific sector. The office space is pretty well documented that office at the moment, and has been for some years, has been very exposed to the economy, and we've actually seen you know, a shrinkage in demand. And at the moment, we've got quite a few offices that are well lit in Sandton but are empty. So, you know, there is a level of uncertainty that we're all quite concerned about in the real estate sector, and that we're not quite sure, you know, what the ultimate impact's going to be. The one thing I can tell you in having to run a business, you know, as a CEO, it is very, very difficult to run it on a remote basis from your home via the sort of screens, you know. So the reality is I do believe there's a big role for office to be played, and that there will be a wielding back to office space as soon as people feel safe to do so. The reality is that we have in our country some of the best quality offices, and certainly if you think about the improvement in technology that has gone into the office sector in the form of green technologies, in the form of design, you know, we are certainly, if you look at a Discovery or the new 144 Oxford where Anglo is going in, you know, these buildings have the best technology, and you can compare them globally to the best properties out there, and certainly, you know, the tenants absolutely love those facilities for their business, and it really helps promote their business and grow the synergies in their business, in that these properties are designed to actually improve their businesses. Industrial as a sector has been sort of the darling, if you'd like, the most popular, and the players once again on the online, and that logistics is a big factor, and that there's growing demand. But even, you know, in this environment, we are seeing a little bit of pain in the industrial sector, and vacancies starting to tick up, because we're seeing quite significant weakness in terms of the covenants. In other words, the strength of the tenants. We've seen quite a few tenants fall over or close their businesses or go out of business, business rescues. We've had significant weakness in that space, and you can see it play out in the industrial sector. And anything to do with tourism and eventing, or even as a pretty well publicized, the you know, the liquor industry has been pretty heavily hit, and there's significant weakness. But of the three sectors, I would argue that industrial probably remains the strongest. There's good demand, and specifically if we go to, let's say, niche areas like data centers, you know, there's been good demand, and we're actually developing quite a few data centers for international players looking for those data centers in South Africa. So that niche area we certainly see as a growing area. I think I've touched on hospitality. I mean, if you've had a hotel, I spoke to a colleague of mine at Liberty 2 Degrees. Amelia has got good relationships. She's part of the Liberty stable, if you'd like, and she was speaking to the CEO of Tsogo, and in fact, he indicated that he had just closed down, or mothballed, if you'd like, 10 hotels. Now, the concern I have about the hospitality sector is that I would argue that if you take hospitality, tourism, and restaurants, it's probably the largest employer in our country. And this area has been the hardest hit. And unfortunately, you know, all the stimulus packages or relief packages or help that government has provided, very little, in fact, pretty much none has gone into these sectors. And I think this area, there's a lot of jobs that aren't formal. So in other words, there's a lot of people on contract. There's a lot of people working on a daily basis as waiters or as cleaners, etc. And I think we've seen massive destruction of jobs in this area. And I do worry that it's going to take us as a country a little bit longer than certainly I would have hoped to see the sector coming back up again when the world is immunized and travel returns back to normal. You know, to bring these businesses out of mothball takes quite a bit of capital, and it'll take time. And unfortunately, in the meantime, there's a lot of people that don't have jobs. So the hospitality sector, we're very concerned about, but you know, we can just pray that the world will change quickly back to something that was more normal, and that we'll see growth in that sector, because I think that sector for our country is a massive growth area. If we can get our tourism sector flying, it's a huge employer of you know, people that don't have to be highly skilled, and that's what we're looking to do, is try and employ the people in our country. And then if we're moving on to the healthcare sector, now, ironically, you think in a healthcare crisis, hospitals, etc., should be a safe bet as an investment. Now, they are, until you aren't allowed to do elective surgery as the hospital group, and you have to keep your beds open for COVID patients that never arrive. And that's what exactly happened in the first phase. And, you know, we've got a healthcare property fund. We literally had to provide all the tenants, being the big hospital groups and others, with rent relief. So it is very ironic. But, you know, certainly what we've seen now is the second phase. You know, hospitals are excessively full. And in fact, you know, I would suggest that sector is providing quite a solid income stream underpinning the rental for that sector. So actually, as a specific niche sector, healthcare, if you just take out the blip of COVID, actually has performed very strong. Another area that has seen good growth is purpose-built student accommodation and student accommodation, broadly speaking. There's a big growth with NSFAS and with the growth in the education sector. There's been good demand in the student accommodation space. The only problem has been that it's very proliferated. So you've got a lot of small players, and it makes it quite difficult to attract big capital. So that I do see in the future that sector will be an area where you see a bit of consolidation, and that some of those funds might list, and you'll see consolidation trying to attract institutional pension fund money. I said I'd touch on residential. I think, as I mentioned, the residential sector, ironically, home sales and sales in certain nodes have had a record period in the past 3-4 months. And the only thing we can think that's driving that is record low interest rates. So if you were renting, all of a sudden you can go and actually borrow money and go and buy a house, and you pretty much at a similar sort of level, and that's because of the low interest rate. So what we have seen is quite strong impetus in some of the residential areas, but we don't know how long that's going to last, and there must be some weakness that will come through as a result of the job weakness. I think another area in real estate that's absolutely a key area, nearly as high a priority as the empowerment side of things, is the sustainability. And when we look at it from a growth point perspective, we certainly we're promoting that into the industry. We're looking at ESG. So that's environmental, social, and governance. So if you think about environmental, that includes energy, water, carbon emissions, carbon taxes, biodiversity, and all the education around these various initiatives, which include training around these initiatives. So there are big projects that certainly we're busy with, and many of our peers in the real estate sector are busy with, and we see that as an absolutely essential component. As we are seeing that the carbon impact on the planet is having a material impact. We're seeing climate change across the globe, and it has ultimately a direct impact on real estate. So if you've got a property in a very low-lying area and the ocean level rises, then your property is going to be underwater, right? So you think about the V&A. If we continue on this vein, you might find you need a snorkel and some goggles to navigate the V&A in a couple of years' time. So it's absolutely essential for us as a sector to work on these aspects. The social aspects we've touched on, so we're going to talk about transformation, our employees, our employee value proposition. If we think about remuneration, that's a massive component. And yes, I mean, the reality is that employees are never paid enough. So you can ask any employee, whether he's young, old, senior or junior, they're always underpaid. And the reality is that that's just a factor of life. And then, clearly the training and the CSI aspects in the South African context for us is an absolute passion in terms of the sector. We need to build that capacity, and that is a big driver to succession planning and to transformation in the sector. And we've seen actually it started to accelerate in the past 5 to 6 years. We've seen large strides being made in these areas. Then governance is a new sort of buzzword which has come up. I mean, I won't use the big C word, corruption, but I mean, that's just a factor of poor governance. And, increasingly for any listed company or even private investor, your stakeholder engagement in terms of the various areas, whether it's your IT, your facilities management, legal, your general supply chain, over and above all your shareholders and your staff, that the governance on how you run your business to ensure a sustainable, good outcome is absolutely essential. So this sustainability area will increasingly become a very key area in terms of ability to attract capital. So if you don't run your business properly, you will not get money, and to do so certainly in the public market. So from our point of view, it's a key area. Then if we look at the ownership side, I mean, clearly real estate, property, you know, and specifically residential, and I mean, increasingly we've been hearing agricultural, you know, very emotive in South Africa, given our history. The reality is it's a sector that's incredibly proliferated. So, you know, if you think about the financial services, the banking sector, you know, you've got 5 or 6 or 7 big players, and that's about it, right? Whereas in real estate, ownership is incredibly widely spread, and increasingly we have seen significant entrance in terms of the black majority participating in this sector, and that is comforting, and it's encouraging to see that happen. So you know, if you think about who are the big players today in commercial property, clearly the listed sector, the REITs, whether they REITs or other property investment companies. You've still got some institutional investors, the Sanlams and the like. You've got the developers. So, you know, there's quite a large developers and private developers out there building commercial property. You've got private investors, you know, the moms and pops that will develop a specific property which they run their own business out or have rented it to another business. You've got owner occupiers. A lot of commercial property is owned by corporates in South Africa. And then we've got foreign ownership. Now, you know, there's a sort of a negative sentiment for some of the reasons in South Africa towards foreign ownership, which I think is, unfortunately, from my point of view, slightly short-sighted. If you want a functional, growing market, you have to ultimately encourage foreign investment into this country. And that helps push pricing up, it helps bring liquidity into the market, and it helps make this sector a strong sector. So one of the 2 or 3 largest property sectors in the globe is obviously Europe, Germany, UK, the US, and Australia. Now, those people have very open real estate investment markets with a lot of certainty. And that's why their real estate is worth more than anywhere else on the planet. And that is driven by a large extent, often with foreign ownership of these properties. If we touch on quickly the headwinds, I think Lisa wanted me to just touch on some of these aspects. Now, I mean, obviously COVID, I'm not going to cover that because, you know, that's pretty well documented. I think one of the things that have been, you know, really a big area for concern for the real estate space is the deterioration of local government. So that would be municipalities across the country. And what we have seen is increasing rates and taxes. So, I mean, compounded over the past 10 years, we've seen rates and taxes compound in excess of 10%, which is way in excess of what rental has grown. So what's happening is property investors have seen significant margin squeeze just on the differential in respect of rates and taxes. And then on top of that, we've seen a deterioration of the services. So if you think about any of the properties in Sandton today, the landlord would have to have some kind of backup on water, some kind of backup on electricity, and all these things cost money, right? Now, the tenants aren't paying for that because they think it's the landlord's responsibility. So ultimately, it just increases the pressure on the property investor. So this is a very big area for concern, and certainly one of the areas that you know, we as an industry would like to work with the BMF potentially to try and get some you know, of these issues highlighted at higher levels. The contraction in our economy, you know, before COVID, you know, we've seen contraction in the economy, and ultimately we've got a product, we're selling space, okay? Whether it's retail, office, industrial, hotel, etc. It's a product, it's space. And if the demand for that space is low, that means that rentals are going to go down. If the demand is high, the rentals go up. And the reality is if we look at the economy and the dynamics at the moment, unfortunately, that's all negative. So we're not in a winning space at the moment, and certainly the government policies around infrastructure spend over the past 10 years hasn't been particularly good. So we've also seen a deterioration of infrastructure across the country. I've raised the issue around foreign investment, and more importantly, the issue around certainty of investment. So if you've got an expropriation bill which is out there, which creates uncertainty around the certainty around ownership, as an example of an asset, then you're not going to get a foreign investor to invest in Growthpoint or any other listed REIT. And that's what we've seen. We've seen certainly from, and that's also been one of the reasons why the share price has been very, very weak. We've seen an exit of many of our foreign investors in the likes of Growthpoint and some of our other real estate investments. And certainly trying to attract foreign investment into South Africa will increasingly be difficult if you have that ongoing uncertainty. So I certainly, believe that, from our point of view, we've taken the view that sense will prevail, and we've continued to invest as a company. We've built Discovery, we've built 144 Oxford, we've invested continuously, significantly into industrial and retail. So we don't see it as a major threat, but it is a threat out there creating uncertainty. Funding challenges, the banks are worried about valuations dropping. And because of that, it's going to be much more difficult to get funding. And our bond markets are also increasingly more difficult in terms of attracting funding to the sector. Weaknesses in valuations, clearly if rentals are going down, valuations go down. And that creates a challenge in itself for the sector in terms of your loan to value ratios and the ability to attract new capital. I think certainly those dynamics, as I mentioned, in office and retail, you're talking about online, you're talking about working from home, those changes of use, all those uncertainties aren't really wonderful for the sector. And then, just generally, if you've got a negative sentiment growth generally around the world on real estate, it doesn't mean that there's a fortune of capital that's looking for a home. And as such, demand is less, which means you're going to see weaker pricing, and that's not good for investment generally. So those are sort of, in a nutshell, just some of the headwinds. But it's not all bad news, okay? So, there are certainly opportunities. We believe, clearly, I've mentioned the lower interest rates. So I think South Africa have got the lowest interest rates on the short term that we've seen yet. Our sector, unfortunately, correlates a little bit more to the long bond, the government long bonds, but certainly the lower interest rates are creating quite a bit of potential liquidity in the private client market and the lower end under 200 million, for instance. So that's a good thing. And I would argue that any investor that has some capital and access to debt can go and buy very, very attractive assets today. So you can buy attractive assets from distressed sellers, or attractive assets from very reputable, good standing sellers, and that there is a churn in real estate, and it creates a very, very good opportunity for investors to get into the market at the moment. And these assets are quality assets. So you can go and buy, I would argue that, the best assets ever are available in the market. So, albeit that nothing's for sale, everything's for sale. And if you put the right price in front of many investors today, whether it's Growthpoint or any other, I reckon that you'd be able to access some of the top quality assets in the country. And those prices will be a little bit lower, certainly on some kind of assets. I would argue that a Discovery with a 15-year lease is probably more valuable in this environment than it would have been, but certainly a very, very different environment, and it creates a good platform. If we think about this year going forward, I think that, it's going to depend to a large extent what happens in the international economy as to how our economy gets a boost. And certainly locally, it's quite important for us to be seen to be having a successful rollout of the vaccine program, because that will create some level of certainty with tourism. It'll create certainty with business, and you'll start seeing the economy normalize. And that's absolutely essential from a real estate perspective. So Lisa, I think maybe, that's just a very quick overview. I unfortunately ran over about 10 minutes on the half an hour was promising, but I think hopefully it gave people a little bit of a background to the sector.
Yeah. Thank you so much, Estienne. I think we have a few questions on the platform. I just have a few to note as well before we just go on to the Q&A. And I like the fact that you spoke about Miss Beatty at L2D. and she's from Old Mutual, moved on to then Stanlib, and then now L2D, and has a fair deal of experience in the field. I think she has about 20, 25 years of then experience. So I think we could consider her as your peer. And then in that regard, in that view as well, was it 2016 when she reconstituted L2D as a then rate onto the market as well, and just showed up and also then aligned investor preferences as well with the then company. So she has done a fair amount of then activity as she then came on as well. And not to place you on the spot, what has been your then sort of benchmark moves, sort of benchmark achievements you are proud of, in your then tenure as then CEO, in then moving along that line to then say, how have you seen your then term of the leadership, being such a then, prolific property exec?
Well, look, I mean, we're not particularly good at blowing our own horn, Lisa. I've been involved with Growth Point since 2002. My colleague Norbert Sasser, who's the group CEO, and I have worked together with our management team that has actually been quite stable for the past 17 years to grow the business to where we've got it at about assets of about 160 odd billion. I think, in this time, we have pretty much done everything that there was to be done in property. We have been involved in BEE transactions. We were the first company in the country to complete a BEE transaction in 2005. We were one of the first companies in the country to come with a big bond program. We were the first company to issue a sustainable bond. We were one of the first companies to embrace green technology and roll out a full sustainability program. Our governance, as a company, has sort of been used by the industry, not just real estate, but also certainly, across the larger listed sector. Our governance and our transparency gets used as a benchmark. We have won the Investor Analyst Awards as a company for our transparency and our presentations and our financial reporting for the whole JSE more than once, and certainly for the property sector continuously for many years. The internationalization of the business was also a very, very big step, and the growth into Australia, Eastern Europe, and more recently into the UK, has all been part of their strategy. And then just the transformation of the business that has happened to date, has been, some people might argue it is slow, but it is material, So I think if you've got a very stable team that hasn't changed a lot, those opportunities to change managers isn't always that opportune. So what we have done is we've grown the business, and I mean, certainly in the last 5 years, the different business units that we have added on have all been well represented in terms of the executives running in that space from a transformatory point of view. And then I think just, generally, we play as an organization, we do try and play a role in, improving South Africa, just broadly. And some of our enterprise development program in terms of Property Point, I would argue, is one of the foremost programs in the country, and has an incredible success in terms of the amount of jobs it's created, in terms of how it just naturally integrates into the sector, And we've seen, you know, the likes of Attack, Fortress, even Cedar government themselves, Perito and PIC, all, you know, participating in Property Point, and it's an enterprise development program that's, you know, provided huge traction for small businesses to come into the sector and not just service Growth Point, but, you know, become sector players. So, you know, we're quite proud of some of these achievements. And, you know, the reality is, unfortunately, the way the world works is looking backwards isn't particularly helpful. You must look forwards, okay? And I know in South Africa, we tend to run the country by walking backwards and trying to look forwards at the same time, which, you know, isn't particularly helpful. So I think, you know, we increasingly have to turn around and look forward and see how we're going to solve our collective challenges, and how we're going to take hands and work together to make this place a better place. Because ultimately, if we don't do that, I think we're going to be all losers.
Oh yeah. And you know, and I think that also ties into a then question we have also, SDN, as well, into the then entry of then businesses into the market, because we have to go straight into the then question as well. We have Jeanette, you know, who has just done a case study on rates for her then finance qualification, and she's just greatly enthused by your knowledge into you know, property as a then whole, and she just wants to know, how does one gain a foot into this into this sector, and how does one actually start, you know? And I think you can take a sort of you know, sort of panning view into how one would then enter the then property sector.
Yeah. So I mean, you know, they have, obviously the property sector has got various aspects, and you know, it depends on where your passion is and where your interest would lie. You know, clearly the advice I would offer would be marginally different. But what we have done at Growth Point is we've created a graduate and training program. So every year we introduce 10 or 11 or 12 students, and these students then go right around the organization and they learn all aspects of the real estate sort of business. So that would say, you know, to kind of put names to some of that: letting, leasing, property management, you know, managing of developments, looking at those opportunities, refurbishments, the asset management side of the business, even to those that have interest, the finance side, the funding, all those kind of aspects potentially covered. You know, it even goes broader. You know, if a student has a legal sort of interest, you know, we cover the legal, that we've got a chartered accountant program, we train accountants, and then, you know, clearly these, ultimately the idea is that those professionals get absorbed by the business. And what we see across the industry is that many of the listed sector, and I speak now purely for the listed sector, you know, most of the companies have quite significant bursary programs and do offer some kind of graduate and training program. There are also other access points via professional firms, via service firms into the sector, which also give potential property players a very, very good experience, even via the financial institution. So I actually started as a private banker and ultimately ended up doing a lot of real estate finance, and that's where I found my passion for real estate. So there are various access points into real estate. I mean, even corporate finance, corporate advisory, all these aspects, if you fall into the sector on those specific traits, you know, it gives you opportunity to really play in the sector. I mean, it could be as basic as buying a flat and renting it out. okay, as a start. Some people just get going doing that, or, you know, as I mentioned earlier, the cheapest and easiest way to get exposure to real estate in this country is you can go and take 100 Rand and you can go and invest it into the listed property sector. And it'll start giving you a yield. You can start following the fundamentals. You can start getting an understanding. I mean, it's as simple as reading, if you take Growth Point's financial report and you take our investor analyst presentation and you read our annual report, there's not much you're going to know about the business that you're going to know about as much as I do. So potentially even more. So the reality is that, you know, the companies today provide a huge amount of disclosure. There's a lot of learning in those businesses, and ultimately, you know, to get involved is quite possible at a granular level. And the only thing that people have to appreciate is that it is a capital intensive industry. So to have the aspiration for me as an individual, whether I'm Estienne de Klerk or a student coming out of university, to overnight own a whole regional shopping center worth 3.5 billion Rand, you know, we have to be realistic. It's not the industry that private investors dominate and own entirely. In saying that, there have been investors and developers in this country that have created those assets. They might have had to divvy up the shareholding a little bit, but they've made a fortune when they got the cycle right. And certainly investors that had invested in the late 90s and the early 2000s, you know, if they exited around 2007 or even a little bit later, you know, those people made very, very good money. And I mean, you know, even whether it was listed stocks, I mean, the investors that were and are investors in Growth Point, you know, they went through a cycle that they made a fortune of money out of real estate. So it is a wealth creator. It is a area where wealth can be built, but similar to any other industry, you have to have skills. And I think, you know, in our country, we mustn't underestimate the value of skill. You can give two people exactly the same opportunity. One guy will turn it to gold, the other one will turn it to manure. So that is the difference in skill set. And, you know, to just expect that every single person can create gold, you know, is not realistic. Not all of us have the same talents. And unfortunately, that is the reality of life. And life isn't necessarily fair when it comes to those kind of things. But I think what is fair is that in South Africa today, I think the playing field is quite level. The opportunities are there. Access and liquidity to the different asset classes are there. I mean, as I mentioned, if you've got the money and you can put the deal together, you can come and buy pretty much any asset in South Africa today, because a lot of the real estate companies want liquidity. So, you know, those opportunities are there, and there are people doing it at the moment.
Oh, yes, yes. And, you know, I just like the point you made on competence. You know, I mean, whenever you see or you listen to the radio or you read an interview or you watch something online and there's a Growth Point person speaking, I think you do hear and see that there's a great deal of competence to the people who are at Growth Point and are then extremely knowledgeable on their then specific service market. And then
you can tell that to our shareholders at the moment. You'd certainly help us a lot.
And then as well, Estienne, a very active branch member of mine, Tato Khanaga, has this to then ask, for you to just, you know, give, you know, a sort of overhead skeleton of what then institutes a then institution investable fund, firstly, and then secondly, second question is then on, you know, now shopping centers have taken a different form. You now have markets. I mean, you go to the Melville, there is that container supermarket, so, going on there, you come to the Pretoria CBD, it's the same. You go further down in Joburg, you have that Brixton student res, which is completely, which is then also the same concept. What's your view on that, on that then aspect as well? Those then two questions.
Okay, so maybe just on the institutionally investable property fund, if you'd like. So, I mean, who these institutions, I've mentioned them. This would be the big asset managers, Allan Gray, Investec, the PICs, the largest, where the government employs pension fund. It also includes pension funds. These are the investors that we are talking about, the large asset managers and the pension funds. And these people are looking for investments, as I mentioned earlier, that reflect effectively, ideally, a growing income return, which sort of matches their obligations from a liability point of view to pensioners, to pay them pension. And they like real estate because it gives them cash flow. So if they invest in a shopping center or office building with a nice long lease, they can kind of model the income over the next couple of years coming from those assets, and that's what they're looking for. They're looking for those income to be able to pay out to the pensioners. So when we look at an investable fund, typically the fund, if it's too small, then you've got concentration risk. So in other words, then it's just one little property, okay, with one lease. And that clearly isn't what a large investor would like to see. So they want a diversified portfolio, diversified in covenants, in other words, who the tenants are that are paying, but also usually a little bit diversified in region. In saying that, we do have niche plays which just focus on the Western Cape as an example, okay? And if you go internationally, the competitive markets like the US, you'll have a listed company that invests in low-rise office Boston, okay? That's it. So, we don't have the scale in our country to be able to do that. So the reality is that most of our companies are either retail or diversified. So Growthpoint is diversified, retail, office, industrial, plus the flavor of a couple of other things, international, etc. So the reality is that typically investors want a diversification and they want decent quality assets that they can kind of relate to and that they can get an understanding of the underlying income streams with quality tenants. So in other words, and that's also another reason why the residential sector has struggled to maybe get off the ground, is that if you've got moms and pops in a block of flats, the quality of those income streams isn't the same as having ABSA, Checkers, and Pick and Pay or whatever, paying the rental as an example. So that quality of earnings is what these institutional investors look at. But it's quite a difficult question from the point of view that, there isn't really a one size fits all. It really boils down to the ability of the promoter of that fund to convince investors that this is a good investment over the long term. And we've seen rubbish being listed. And so, as I mentioned, that's what complicates the question as well. In terms of, let's call it retail, and I mean, retail, is a whole plethora of different types of retail, So on the very large side, you've got super regionals, the likes of Sandton City, Mall of Africa, Durban, you've got the Old Mutual property, the very, very large one on the ridge there. And Century City in Cape Town. So these are super regional malls. They're larger than 80,000 square meters. They're very diversified in their tenant base, and they've got a very wide offering. Then the next level down is regional shopping centers. So they're slightly smaller. They're usually somewhere between 30 and 80. Then you've got neighborhood shopping centers and convenience or community, convenience, and then neighborhood. So they're this next step down. And then you're moving into kind of either single tenant retail. We also have something called retail warehousing, which is quite unique. And then if you look at these sort of niche plays around container property developments, etc., you know, I think generally they're not the norm, I would suggest. And certainly we haven't seen major development in those areas. So I don't see those. That would more be sort of neighborhood niche and convenience. And they do play those kind of roles per se in the market. But the sort of big space that we've seen is you know, the development of sort of medium-size shopping centers, so community neighborhood shopping centers, and then regional shopping centers across our country. So we've started seeing that rolled out into pretty much everywhere, into rural areas, etc. And that's been a very big growth area on the retail side. But unfortunately, the sort of market, certainly in the developed metropolitan areas, has been reasonably weak, because I do believe there's a bit of overdevelopment there.
Oh yes, oh yes. Okay, perfect. As we then move along, Estienne, another question is from Thabo Mofokeng. His then question is centered around access to capital, and then prelude to that is that key barriers to then entry into the market space has then historically remained fair access to capital, and that often enough private investors may come then across commercial deals with solid blue chip tenants with the bells and whistles, yet still fail to then secure fair funding, and that's with then regard to then senior debt, and then funding structures relative to rates. And what is the view of then growth points to then entrance to market in terms of then any of your then equity capital funds?
Yeah, so look, I mean, I think, you know, access to debt capital, look, I mean, clearly that question is probably more appropriate for the financial institutions to answer. But from our perspective, what we have seen, and it's not unique to now, but through the cycles, you know, that appetite from the financial institutions varies, okay? So if things are booming, you'll find access to capital significantly easier and simpler for everybody that brings a deal. Whereas in times like we are in now, where you've got, you know, let's call it a couple of headwinds, the financial institutions are significantly more tight-fisted with the availability to debt. In terms of having access to the capital, I mean, I think that most of the financial institutions are actually quite incentivized, if we want to put a race label to it, to fund black investors. So I do see that you know, certainly we've seen that actually most of the black investors that have attempted to you know, within reason. I mean, you know, if you haven't got a balance sheet and you're trying to raise R1 billion, you know, clearly you have to be a little realistic. And I think maybe that might be a tip that could be offered, is that one has to be a little bit realistic and maybe try a little bit smaller and then build it up. So we've seen some very, very large players that started small and they've built it up. They use the equity, they grow over time, and they've grown their business. I mean, Growth Point's a good example. We started with 100 million of assets. We now got 165. It takes time. You have to build these things up, and you have to build a track record with any financial institutions. They're giving you money, so they have to be confident that you know what you're doing. So if you rock up there day one and you want R1 billion or 500 million or even 200 million, and you've got no balance sheet, no experience, and you're working on your own, you know, it's going to be, you know, you can't blame the guys not wanting to give you the money. So the reality is that, That's where partnerships come in. And certainly from Growthpoint's perspective, what we've been trying to do and what we have done quite successfully over time is we've done a couple of transactions where we've provided a level of mezz funding, in partnering with the investor buying the assets from us as an example. So vendor finance, if you'd like, partial vendor finance. And we've seen some good success in that space. And in fact, we've sold over the years large quantities of property to Black investors over a period of time. So this is, I think, one of the areas that we'll probably see continued growth. I mean, there's a very large incentive out there with the current legislation as it is for tenants to rent from wholly owned Black investors. And clearly that's not in the interest of the listed property sector, but certainly what we have seen is an actual massive emergence of many Black investors buying assets. The exact example of where your specific person didn't have success, there's a whole bunch of guys that are having success at this point. But I think my advice would be smaller is probably better. And interestingly enough, it doesn't have to be a direct property building. You can go and buy a portfolio of growth points or a portfolio of listed stock, and you could find that's much more liquid, much more tradable, and it also offers you transparency and yield. You don't have to necessarily have the same management skills on the ground, and it offers a level of flexibility, and it can be funded. So we have seen quite a lot of investors do that. So those are different maybe proposals.
Oh yes, indeed. Estienne, a few more questions from that, and then the next one is from Julian Zimande, who says, "Thank you for your then presentation. I would like to hear on your human capital in property skills development. Are we on track? Are we scaling enough people? Are we doing the then proper and then required skills?" Second one is from Mr. or Mrs. Anonymous, and the then question reads, "What's your take on residential to office conversion options in an effort to reduce companies' overhead costs? Do you think companies will then consider that?"
I just want to confirm that it is residential to office and not office to residential.
It wasn't specific.
Okay,
it wasn't
and I'll touch on both ways. We can have a look at it. Yeah.
Oh yes. And then another one, and I think this one is more towards your non-GLA stuff. It's from Fundo Zama, and it is greetings, informative presentation. Besides being a property company CEO and still believing in physical office space, as a mention in the presentation, as a CEO, your take on cost of physical office space versus virtual platforms, keeping in mind good management of resources. Yeah. And I think we'll come, we'll then revert to the others as well.
100%. Okay, so let's talk about skills. So, I mean, I think in the sector, via SAPOA, via specifically the listed sector, many companies and certainly SAPOA have quite well-developed skills development programs. And we are seeing through our universities, certainly the people coming through with property skills are very, very strong, and they've had very, very good success in certainly our organization, right, in terms of establishing themselves, building a decent career. I think there's obviously academic skill, okay, and then there is the PhD of the University of Hard Knocks, okay, or call it practical experience. And unfortunately, that part takes time, right? And I mean, we've unfortunately recently lost one of our very senior executives, Rudolf Pienaar. I mean, this guy was arguably one of the foremost, he was certainly the visionary on sustainability in real estate in South Africa. And you know, it's just very, very difficult to replace that kind of skill, to be honest, because this guy has come from grassroots. He has been in every component of property, retail, office, industrial, hotels, etc. He's been involved in development. He's been involved in the property management side. He's been involved in the asset management side. So he's got a massive overview and a very deep understanding, having actually physically done each one of those little components for some time to build his understanding in that. Now, unfortunately, you know, these things take time, and this is years of experience. It's not you can't just rock up and come with your very fancy university degree, irrespective of what it is, and tomorrow know all the stuff that somebody like that knows. So there's a big role for mentorship in organizations. And unfortunately, mentorship takes time and it takes patience. And a lot of the new generation, you know, we tend to tease them and say, look, you rock up in the organization tomorrow, you want to be the CEO. Unfortunately, you know, and some of them bright enough to be that, I can tell you, and certainly have the qualifications to do so, but they're missing that practical experience to some extent. So what we are trying to do with our graduate and training program is to try and start that mentorship program, and within our different divisions, we emphasize, in terms of our succession planning, the development of executives and of staff right throughout the organization to actually learn, you know, from the guy that you report to or from the people around you, because that's the actual learning, to be honest. And that's the skill set that differentiates businesses from each other. And I mean, I think that's the component that's unfortunately certainly fallen apart in our parastatals, as an example. So that is evident in what we are seeing in municipalities, in parastatals, that there hasn't been this gradual skilling up of people. So ultimately, you have people in positions where they're not really able to deliver the value that has to be delivered. And in the end of the day, what is business about? It's about creating value. It's about delivering a service or solving a problem, and for that service or that product or that problem that you are solving for somebody else, they're prepared to pay you something for that. Now, that value creation takes skills, and somebody that doesn't have the skill cannot do that. So ultimately, those are the things that we're trying to work on and that we're trying to bridge. So it's not a very simple answer, but it's a very complicated question. But certainly, I do see that over time, I mean, we are starting to see, you know, the fruits of some of the works that has been done. In terms of the residential to office conversion or vice versa, I would argue that the bulk of what we've seen is more office to residential. So we've got a surplus of office. I mean, to be honest, I think Growth Point, today we've got a portfolio of just over 1.6 million square meters of office. And I think we've got pushing 350,000 square meters of vacancy. Okay, so there's a proper crisis in office at the moment. And on top of that, in the balance of the let portfolio, there's a lot of offices in Sandton that are let to financial institutions, attorneys, firms, etc. But nobody is actually in the office because the guys are working from home. They're too scared to come to work, or they're not allowed to do so. Okay, so what we are seeing is that alternative uses for office has been, certainly over the past few years, area of big focus. I mean, in Cape Town, they've converted thousands of square meters of empty office into empty residential units. So we've seen, a lot of that conversion happening. I think the question of going the other way around is more specific to maybe the work from home dynamic, where, and maybe I can touch on, some of the last question at the same time. From a cost point of view, you're obviously going to save money where people are working from home and you're not renting offices. But if you're trying to run an organization where there has to be communication, where you have to do strategic planning, where you have to mentor people in this culture that we're trying to build in Growth Point, as an example. It is very difficult to mentor people via a laptop in this environment. You lose all the sort of softer components to it, and it's quite difficult to quantify the value of that synergy, of how people work together, how they communicate. And certainly, we foresee that people ultimately want to work from a workplace that's also very good for the brand of an organization. If you've got the Discovery building, everybody knows where Discovery is. It actually promotes their brand. And in fact, that is a very, very good case study for anybody that's interested, is to go and speak to some of the people at Discovery. Those guys are extracting value out of that campus development, which they didn't perceive they were going to get. So synergies of how departments work together, how people are being trained, how communication flows, that you can't do on a remote basis. And the reality is that if you are a youngster coming out of university and you have to start at a new job, and there you are sitting behind your PC, it's going to be quite difficult to grow and learn the skills that you need. But there's no doubt that it is a theme. Certainly, we've seen collaborative workspace, the WeWorks of the world, being big hype. Certainly, we dipped our toe into that space, and I wouldn't say it was a roaring success, but there is certainly a role to be played. It's a amenity, and I think that's the one thing that we are certainly learning, is that from an office perspective, there's a lot of pressure on landlords to provide amenities. So if you're in a building, you want access to the coffee station, or a coffee shop, or a small restaurant, or even a gym potentially, or even collaborative workspace where you can come and go, etc. So, and I think there are different strokes for different folks as well. So it is I'll be honest, we don't have the full answer in this specific space yet. We're busy reading, we're busy learning, we're busy trying things, and some of them are more successful, some of them aren't. But certainly we believe that from a cost perspective, it's not all. You can't put value on the rand and cents value of some of the benefits that you're getting from working together in your organization.
Yes, definitely. And I think, Estienne, as well, we have another question here. I think that you finished the water, eh?
I think it's done.
So we have another question here, and it's from Anon. And it's more around Southern Africa, on why our then SA-based retailers there seems to be some form of trepidation within reaching out and then having presence into Southern Africa. And I know that you have your then Growth Point Investec Fund, which then focuses on Africa funded projects, while the rest of Africa. Can you then please then elaborate on that paradigm?
Yeah. So, I mean, maybe just to contextualize our experience into Africa, we've obviously got a team who's very, very experienced. These guys are all ex-Sanlam real estate executives that created a fund. Ultimately, we then recruited them to create what was then called the Growth Point Investec Africa Property Fund. That fund will be rebranded soon, because obviously Investec Asset Managers changed their name to 91. So we're probably going to give the company a new name. This entity has invested into office and retail assets in north of our borders, being in Zambia, being in the Western Africa, broadly speaking, and the idea is to create a institutionally investable property company that can be a consolidator of some of the space. So I think the first thing that people have to appreciate is that the economies that you go into, so let's take Nigeria out of it for now, are very, very tiny. So Accra per se, I mean, I would argue is smaller than Bloemfontein, right? From a real estate investment perspective. So that creates, you know, there's the sort of little story about the two salesmen, you know, they shoe salesmen, they go up north and they get asked to assess the market. So the one guy comes back and says, hey, nobody's wearing shoes, so there's no market. The other guy comes back, says, geez, nobody's wearing shoes, there's a massive market for our product. Okay, so if it from a real estate perspective, we've taken the view that we think long-term there's going to be growth in these markets, and that's why we're investing it in those markets. If you think about the retail environment, what the difficulty has been is in-country finance. So all these assets, certainly on retail side, have been dollar-based, and even the offices and industrial, all dollar-based funded, and the leases are dollar-based. So what immediately happens is if you're in Zambia, okay, and you shopping in your local currency, the tenant that is selling the goods to you, he has to pay his rental in dollar. And unfortunately, when you get massive movements in the currency, all of a sudden your dollar-based rental starts eating into the margin. And that's what's been a big challenge in the African sort of property development space. Certainly, the availability of currency and the flow between between these borders have been a challenge. And in some cases, the one point I raised, which was certainty around ownership of the property, is pretty weak. And that has also deteriorated investment into these countries. So you need certainty that if you buy a piece of land, that you own it and you can build a building on it and you can rent it out, and it helps to have access to capital. So what we've been able to do with the Growth Point branding and 91 branding ultimately is try and attract capital to the sector. And we've got a fund now pushing $600 million of assets. So it's, you know, the train sort of left the station and is growing well. But, you know, I wouldn't say that everything is absolutely moonshine and roses. You know, we've had in Nigeria, we've had issues around riots. It was pretty well publicized. In Zambia, we've had issues around currency as well as in Nigeria. So it's not an easy place to do business. And for some of the reason, you know, often I think the South Africans are maybe not always as well received, and certainly our retailers haven't found it easy. And I think there you have to bring in the logistics component. So if you're moving goods into these markets from South Africa, it's not always easily done, not through our ports to get the stuff out and not through the host ports to get the stuff in. And then there's the issue around currency and profitability, which has been a challenge for most of the retailers. So, you know, I think you'll probably get a much more detailed, better answer from the retailers themselves, because they certainly the guys that have been trying to do the business there. But certainly we have found that often the local retailers outperform some of the South African offerings.
Oh yes, perfect. And I think that as well, we have another question from our very active brass member, Tato Khanaga. I think that this guy really likes you. So I think maybe your charm and charisma are pulling through there. And then he says, can Growth Point assist in designing a portfolio that may assist in then acquiring the USA EB5 in the long term?
The USA, sorry, I missed that. It just broke up.
The USA EB5 in the long term. I think it is that investment, it is that immigrant investment scheme in the US.
Okay, I'll be honest, I raised my hand in ignorance. I am actually not familiar with that specific dispensation. The USA, and I mean, there is a listed company and there are some private investors that have invested into the US and have actually, you know, arguably been quite successful. But I think the one thing that we have to appreciate. You know, if you're sitting here on the bottom end of South Africa, $1 translates 15 times more every time. Okay, so you need quite a bit of capital. The second thing is an incredibly competitive market. You can appreciate it's highly skilled, highly developed, and has the biggest REIT market globally. So if you take all the REITs in the whole world and put their value together, 65% of them will be US REITs. So it gives you an idea of the scale of capital that's invested in those markets. The second thing is that the American guys might talk English, but that's where the culture is the same. They will slice you and dice you, okay, for 50 cents. So the reality is it's a highly competitive area to do business, and it's quite difficult to have relevance in the market. So in other words, if you think you can come in there and become, you know, a relevant player, it's very, very difficult to do so, because as I mentioned, you know, the guys are niched to the extent low-rise Boston office or specific healthcare, you know, step-down facilities or whatever the case may be. So it's incredibly niched. And I think the only way that you can successfully play in that market is to play on a partnership basis. So you're going in with a local partner, you're co-investing, you're having the same exposure, and you're working with them on that investment case. The reality is, I do believe that it's obviously a very investable market. I do think that whoever invests there must just, you know, do a little bit of homework around your tax and your legal component with that kind of investment as well. But you know, the investors that I've spoken to that have invested in those markets are very niched. It's normally in a city, in a specific sector, and they've done reasonably well, given the fact that the American economy has been actually quite strong over the past 5-6 years.
Oh yeah.
But unfortunately, I'm not familiar with that specific dispensation, so I'll have to raise my hand in ignorance. Apologies.
So what I think we'll do is that we are progressively moving towards the closing time. What will then happen is that we'll then take these questions which are like these EB5 ones. Take them, send them to you. You can then meditate on them, and then you can then answer them. The last two questions, STN, are from Bulelani Mini, and he's a young budding property entrant as well. So he is quite. He does say that he's a bit knowledgeable in the space, to just give his sort of unofficial CV there, and he just wants to know your timeline view of the rate space in the next 15 years.
Okay.
That's the totality of his question. So not to also place you on the spot as well, your timeline projection of the rate space.
Okay, so I think COVID has highlighted maybe some weaknesses in the REIT model, if you'd like, and more specifically in South Africa. So the way, and I'll admit, you know, I was personally the driver of the REIT dispensation with National Treasury, and you know, in designing, if you'd like, the REIT dispensation, you know, we didn't really contemplate an environment that we are in at the moment, to be honest, you know, where companies literally not getting their rental, don't have capital, etc. So I do think that something that we'll have to fix in the future is the ability of REITs to be able to retain a little bit of the income. So if you don't have access to more debt, you can't really raise more equity capital because you're a smaller REIT, and the investors are are not so keen to invest in smaller REITs at the moment, and you can't retain your own income, okay, without triggering significant tax, then you're going to have further problems with your investors. Then there's a problem. So I think one of the things we're going to talk to National Treasury about is maybe providing for some kind of dispensation that means that they can retain some income, okay? And that is something that I do see that we'll have to address. There are various other little aspects that need to be addressed from the tax dispensation point of view that I certainly think will be ongoing with National Treasury, and hopefully, we'll be able to improve. Because what are we trying to do? We're trying to create the best of breed REIT dispensation globally, okay? And that it provides all the investor protections, that it provides the best of breed governance, the best transparency, the best liquidity and tradability, and that investors, whether I am the granny that invests in there or whether I'm the tycoon that invests in there, effectively gets equal access, it's tradable and liquid, and that those investors are protected at least in terms of their rights, and that they get the best of breed management at least, and that there's a transparency with that so that investors can decide, there's company A, B, and C. These guys look like they know what they're doing. There's good reporting, good financial management, okay, and company B might not be quite the same. So they must, they're going to trade on a different rating. So I do see that there'll be more differentiation between the well-run companies with good liquidity and let's call it the others. I think there is, in the next 15 years, I believe sooner, you're going to see some consolidation in the sector, okay? Once there's a bit of confidence coming back, you'll see the smaller REITs maybe banding together, creating bigger, more liquid, tradable REITs, which will have better access to capital. So I do think that consolidation will definitely be a factor. And then there's a bit of a, maybe, a couple of philosophical, political kind of views on the thing. If we go down the low road scenario where you have very socialist policies coming through, then I think that you'll find significant continued weakness and very poor investment into the sector. If we go the other way, which is good investor protection, very good ownership rights, and sort of certainty on policy with good investment into infrastructure supporting the sector, I think you're going to have a very, very strong sector, which will be, world class. And that's what South Africa needs, because ultimately we need to create jobs. And the only way we're going to do it is to create businesses and attract businesses to South Africa. So if you read in the newspaper that Anheuser-Busch SAB pulling a 2.5 billion rand plant, that is very, very serious for us as a country. And we shouldn't be in that position at all. We should be doing everything in our power as a country to attract business. Doesn't matter whether the guy comes out of Russia or whether he comes out of China or whether he comes out of America. We must be attracting businesses to our shore so that we can accommodate them in our real estate, so that they can pay taxes in our country, so they can employ our people, okay, and that there can be skills transfers, and that we can increase our trade with the international market, because that's how you grow economy. So I do believe that if we get that scenario right, I think it's going to be a strong sector. And I do think that you'll find more niche players coming into the market. So we've already got a hospitality company, we've got a focused industrial property company. I think over time, for new entrants to come into the market, it's going to be increasingly difficult. So you're going to have to bring a niche answer. So like purpose-built student accommodation, residential, whatever the case may be. So those are maybe some of the insights that I think that that will play out in the South African environment.
Yeah. Okay. And I mean, sure, Estienne, I think this just proves that there's still a lot of conversation to be had via BMF Sandton and with GrowthPoint, primarily your office. And I think from here, we can only hope that we will continue to have conversation, that you and I will then create the then right channels for our then specific organizations that we then represent to then speak and to then collaborate. I think there's a number of very important action points which you have raised in the then conversation, and I think it's then extremely important to then create a good collab and then also information sharing, and then move with a good then relationship. Thank you so much for your then insight, knowledge, expertise, sharing of then your then views tonight. I will hand over to our deputy chair to do our vote of thanks, and then we will then close the then program. Thank you so much for your views and also participation. Hope in future to be able to then speak further. Deputy Chair, are you there?
Thank you, SG. My task tonight is the most easiest one, to do a vote of thanks, to propose a vote of thanks to the guest speaker and also to the audience. On behalf of BMF Sandton branch, it is my privilege to propose a vote of thanks to you, Mr. Aston de Klerk, Growthpoint CEO in South Africa. We thank you for your time that you have made available to be able to speak to us as a branch and to share your knowledge and also the trends, what is the latest in commercial property sector in South Africa. We are more wiser than before. You did share some interesting things that are happening in the sector, which we appreciate. We obviously going to be in touch with you offline, as the SG has said, because we believe that there are still other areas of common interest that BMF and Growthpoint can then engage on. And then we can move this partnership or this relationship that has started today forward, or it has started before. So we do really appreciate your time, sir. Thank you very much.
Thank
and
you.
To SG.
Thank you very much. I appreciate it. And if there are questions, I know I saw there was one Moody's, etc. Maybe anybody that would like to mail me, my email address is edaclerk@growthpoint.co.za. I'll try and answer all your questions that we didn't possibly address here.
Thank you, Astin. And SG, thanks to you, sir, as the facilitator. You've done a great job. I did not know that you can facilitate, so it means now the chair has a deputy when it comes to facilitating these events. You've done a great job. Thank you very much. And also to our audience tonight, there is no branch without support of its own members or the friends of BMF. The friends of BMF definitely are those non-members who we hope after this event will then convert that status of being non-members or friends of BMF into BMF members. Like I have shared in the chat box that to be a member of BMF, you can easily go to www.bmfonline.co.za, and then you look for membership. That is where I'm sorry about that. Yeah, so that is how you will then follow all the steps.
The next member phoning in the deputy chair.
I'm telling you. And to the office, to the national office, the marketing department, the Itumeleng and Tanta, thanks very much, guys, for setting up this Zoom meeting so that we can have this very successful event. We know it's after hours. We will always appreciate your efforts to make sure that BMF events become a success. Thank you very much. In that, SG and Shay, I would like to close by saying as well that we have a youth, the young professionals within BMF Sandton branch, who will be participating also in 2 weeks' time in a conversation which will be facilitated by the Black Business Council, which part of the discussion all of us will be around the climbing the corporate ladder. So we will be posting in our social media further information about the event. And please do follow us on social media, Twitter, Facebook, Instagram, and on YouTube as well. We will be posting this recording. We did record the event, so it will be there through the assistance of our national office. So in that, I would like to close and say thank you again once more, Mr. Aston, de Klerk, for your time and for your patience, because there were lots of questions that were coming in. Yeah, thank you very much. I close in that. Thank you.
Anytime, folks. Thank you very much, and good luck for the year. Hey.
Thank you so much.
Thank you, everyone. Bye.
Thank you, everyone. Thank you.